In 2019, TurboTax asked Americans a series of questions about their living situation, their dependents, and who paid for what. Based on those answers, it assigned a filing status. In 2026, TurboTax asks the same series of questions, almost word for word. The tax code changed, the standard deduction changed, the enforcement budget changed. The questions did not. And here is the part that should bother you. The software does not check your answer. You say you paid more than half. It believes you. The IRS does not. There are 5 filing statuses in the American tax system: single, married filing jointly, married filing separately, qualifying surviving spouse, and head of household. That last one is the one that saves you the most money. If you are unmarried with a dependent, it is also the one most likely to draw IRS scrutiny. According to data reported by the Treasury Inspector General for Tax Administration, head of household filers face examination attention at roughly 2.5 times the rate of married filing jointly returns, not because HOH filers are dishonest, because the rules for qualifying are specific and the tools people use to file are not. This is about the space between a question on a screen and a rule in the tax code, and the company that profits from that space. Start with what head of household actually gets you. For tax year 2025, the IRS set the standard deduction for a single filer at $15,750. For head of household, it is $23,625. That is a difference of $7,875 for 2026. The gap widens slightly. Single gets $16,100. Head of household gets $24,150. That is $8,050 in deductions you either qualify for or you do not. There is no partial credit. You are either in or you are out. The tax brackets are wider too. A single filer hits the 22% bracket faster than a head of household filer. So the deduction is bigger and the rate kicks in later. Combined, the difference in actual tax owed for someone earning around $65,000 to $70,000 can be somewhere between $1,500 and $2,500 per year, every year you file it. So when TurboTax says, based on your answers, you qualify as head of household, you do not question it. You see the refund go up. You click Next. That click is the first bomb in the box. To claim head of household, the IRS requires 3 things. 1. You are unmarried or considered unmarried on the last day of the tax year. 2. You paid more than half the cost of keeping up a home for the year. 3. A qualifying person lived with you in that home for more than half the year. Each of those has a precise legal definition, and each of those is where the software diverges from the code. Take the second requirement, more than half the cost of keeping up a home. The IRS defines this as rent or mortgage payments, property taxes, home insurance, repairs, utilities, and food eaten in the home. It does not include clothing. It does not include education. It does not include medical care. It does not include vacations. It does not include life insurance. TurboTax asks you, did you pay more than half the cost of keeping up your home? That is the question. One question, a yes or no. No list of what counts. No calculator. No follow-up asking you to enter your rent, your utility bills, your grocery receipts. Just a question and a checkbox. You think about it for 3 seconds. You think about the mortgage you pay. You click yes. You just self-certified for a tax status that saves you $2,000 a year. And nobody verified anything. The headline says progress. Now take the third requirement. A qualifying person who lived with you for more than half the year. If you are divorced with shared custody, this is where the math gets personal. Consider someone in Columbus, 37 years old, warehouse, logistics, earning about $64,000 a year, divorced, 2 kids. Joint custody agreement says 50-50, week on, week off. TurboTax asks, did a qualifying dependent live with you for more than half the year? This person thinks about it. The kids are there every other week. They sleep there, they eat there, they do homework at the kitchen table. So they click yes. But the IRS counts nights, not weeks, not feelings, nights. And in a 50-50 custody arrangement, if the child spent 183 nights with the other parent and 182 with you, you are not the custodial parent. For tax purposes, one night, that is the margin. The software did not ask how many nights. The software asked a feeling question and got a feeling answer. You put the phone face down on the table, then you pick it back up. There is a tiebreaker rule. When the nights are exactly equal, the IRS gives the dependency exemption to the parent with the higher adjusted gross income, not the parent who clicked yes on TurboTax, not the parent who pays more child support, the parent with the higher AGI. If your ex earns more than you do and you both claim the child, and the nights are truly split, you lose. The software did not tell you that. I went in expecting to find a flaw in how people use the software. What I found was a flaw in what the software asks. The questions are technically not wrong, they are just not enough. And the gap between not wrong and enough is where the audits live. Here is the part that should genuinely unsettle you. The Treasury Inspector General for Tax Administration has estimated that millions of head of household filings per year may not meet the qualifying criteria out of roughly 22 million total HOH filings annually. According to IRS statistics of income data, a significant share may be incorrectly filed, not fraudulently, just incorrectly. People answering questions the way they understood them, and getting a different answer than the IRS would. And the IRS knows this. That is why HO returns draw examination attention at roughly 2.5 times the rate of married joint returns. The agency built its enforcement priorities around the assumption that this specific filing status is overused. They are not guessing, they have the data. California ran its own review. In a state-level audit of 150,000 returns, the Franchise Tax Board found roughly 30,000 misclassified filings. The state assessed $35 million in combined taxes and penalties. $35 million from one state, one filing status, one checkbox. The system calls this a choice. The math calls it a trap with 2 exits, and one of them is locked. Now, here is where the story flips. You might be sitting here thinking TurboTax made a mistake, that the software failed, but this is not a bug. This is the product working exactly as designed. The product is not accuracy. The product is completion. The faster you finish, the more likely you are to pay for the next tier. The more confident you feel, the more likely you are to come back next year. A question that says, "Did you pay more than half?" and moves on is faster than a question that says, "Enter your mortgage, your utilities, your groceries, your insurance, your property tax, and we will calculate whether you paid more than half." The second version is more accurate. It is also more likely to make you stop, get frustrated, and close the tab. I want to be clear. I am laying out publicly available numbers here, not telling anyone what to do with their own return. But look at what these numbers actually say. Intuit, the company that owns TurboTax, reported total revenue of $18.8 billion for fiscal year 2025. According to its earnings release, it holds roughly 60% of the consumer tax preparation market. According to a 2025 Citi survey cited by Financial Modeling Prep, Intuit spent a record $3.9 million on federal lobbying in 2025. Per Open Secrets, over $3.8 million in total lobbying since 2004. Combined with HER Block, the two companies poured more than $7 million into federal lobbying in 2025 alone, according to Open Secrets reporting from April 2026. That is part of $103 million combined since 2003. And the IRS Direct File program, the one that would have let millions of Americans file for free directly with the government, was shut down in November 2025. You paid for the software chose your status. The status may be wrong. If you get audited, the software is not in the room, you are. That is not a service, that is a billing arrangement where the product is your confidence. The warehouse logistics worker in Columbus, $64,000 a year. 2 kids, 50-50 custody, clicked yes, filed as head of household. Took the $23,625 deduction. Instead of the $15,750 one, saved about $1,900 on the federal return. If the IRS determines this person did not qualify, here is what happens. First, the filing status reverts to single. The standard deduction drops by roughly $7,875. Taxable income goes up by the same amount. At that bracket, that means somewhere around $1,800 to $1,900. In additional tax owed, then the IRS adds interest. Then, if they determine negligence, they assess the accuracy related penalty. Per IRS Section 6662, which is 20% of the underpayment. That is another $370 to $380 total bill. For one checkbox, for 1 year, roughly $2,200 to $2,300. And if this person filed the same way for 3 years, you can multiply that. Start with the $1,900 they thought they saved, subtract the tax they now owe. Subtract the penalty, subtract the interest. They are not at zero, they are below zero. They lost money by using the deduction they were told they qualified for. Nobody talks about this at dinner. The fix exists, but it is not fast and it is not free. Form 1040X, Amended Return. The IRS says it takes 8 to 12 weeks to process, though some cases take up to 16 weeks in practice. With current processing volumes, 20 weeks is not unusual. You cannot e-file a 1040X for a prior year through TurboTax without paying for the current year product. So the company that helped you file incorrectly now charges you to file the correction. There is no version of this math that produces a comfortable answer. Here is what actually determines whether you qualify. Sit with a blank piece of paper. Write down every dollar you spent on mortgage or rent, utilities, homeowner or renter insurance, property taxes, repairs, and food in the home for the full tax year. Now write down every dollar anyone else contributed to those same categories. If your number is not larger than 50% of the total, you do not qualify. It is not about how it feels. It is not about who does the dishes or who drives the kids to school. It is arithmetic. And the IRS has a worksheet for it. Publication 504 for divorced or separated individuals. It is free. It has always been free. And the custody question, count the nights, not the weeks, not the holidays. The actual nights your child slept under your roof. If that number is not 183 or higher, the child is not your qualifying person for head of household purposes. The tiebreaker goes to the higher AGI. If that is not you, you file as single. That is the rule. It does not care what your divorce decree says about shared custody. It cares about nights and dollars. Now, I am not telling you to do any of this. But here are the levers that exist in the system right now. You can pull your last 3 years of returns. You can run the IRS worksheet against your actual numbers. If the answer comes back wrong, you can file a 1040X before the IRS finds it first. A voluntary correction generally avoids the negligence penalty. An IRS-initiated correction does not. The cost of being right is time. The cost of being wrong is time plus money, plus interest plus 20%. There is a machine in this system. You feed it your answers. It feeds you a filing status. The machine does not know if your answers are right. It does not check. It does not cross-reference. It does not pull your custody agreement or your utility bills or your lease. It takes your confidence and turns it into a tax return, and then it moves on to the next customer. $18.8 billion in revenue. Millions of potentially incorrect head of household returns every year. One checkbox. If the question on the screen is designed to be easy to answer, and the rule in the tax code is designed to be hard to satisfy, then whose interest does that gap serve, and how long has it been serving them?